How many more times will you sit on the sidelines while the smart money, what people often call whales, moves billions before the market even reacts? Most traders do not realize this. By the time the Federal Reserve makes its official interest rate announcement, the market has already chosen its winners and its losers. The big players, the institutions, the funds, and the whales, they're not waiting. They're positioning right now. And where are they doing it? On Binance. Let's step back for a moment. The Federal Reserve, often simply called the Fed, is a central bank of the United States. Every few weeks, they announce whether they'll raise, lower, or hold the interest rates. Those decisions affect borrowing costs, inflation expectations, and how attractive or risky different assets look. In traditional finance, Wall Street traders react to Fed announcements within seconds. Algorithms read headlines instantly and trigger trades faster than a human can blink. In crypto, the same principle applies, but with even higher volatility. When the Fed changes rates or signals its next move, Bitcoin, Ethereum, or altcoins can swing by thousands or even tens of thousands of dollars in minutes. Here is the thing. The smart money does not wait for Jerome Powell, the Fed chair, to step up onto the podium. They move ahead of time. And if you're wondering where they park their money before the chaos, the numbers are clear. They go to Binance. Think about it. Every financial news outlet is screaming about the Fed decision, but the people who actually profit are not glued to the news. They are already preparing, they are stacking their stablecoins, they're deploying capital, they're choosing their battlefield before the rest of the market even knows a war is coming. Now, let's break down what is happening. According to data from CryptoQuant, a blockchain analytics firm, Binance recently saw more than $2 billion in stablecoin inflows. Stablecoins, for anyone new, are digital tokens that are pegged to the value of a real-world currency, usually the US dollar. Examples include USDT, Tether, and USDC, USD coin. Traders use them as dry powder, money that is ready to deploy into Bitcoin, Ethereum, or altcoins at a moment's notice. So when you see billions of stablecoins flowing into a single exchange, that is ammunition, not retail noise. That is locked and loaded capital waiting to be fired when the first signal comes. And while smaller exchanges are struggling to capture attention, Binance isn't just leading the pack, it's dominating. Now ask yourself, why are whales moving an average of over $200,000 per deposit into Binance instead of spreading it across multiple platforms? Why are altcoin deposits on Binance 4 times higher than what another exchange recorded in the same week? Why did Binance add 19,000 active depositors while other exchanges barely made a dent? The answer is liquidity. Liquidity means how easily you can buy or sell an asset without affecting its price too much. On high liquidity platforms like Binance, you can move large amounts quickly with tight spreads. That is a small difference between the buy price and the sell price. On low liquidity exchanges, your trades move the market. You lose money just by trying to get in and out. When the Fed makes its move, markets react in seconds. You don't get the luxury of fumbling with wide spreads, thin order books, or delayed executions. If you're not where the liquidity is, you're already behind. And that is why whales choose Binance. They know that in a fast-moving market, liquidity is not optional. It is survival. You know, by the time the Fed decision drops, the real move is already halfway done. The whales will have pumped or dumped, and retail traders on the wrong platforms will be left chasing shadows. Imagine you've loaded up on an altcoin on a smaller exchange. The announcement comes, the market spikes, but instead of quick profits, you see spreads widening. That means the gap between the buyers and the sellers explodes. Liquidity dries up, your exchange lags, and by the time your order executes, you've lost 5%, 10%, or maybe even 20%. Meanwhile, on Binance, Traders already entered, exited, and re-entered while you are still refreshing your screen. That's the hidden cost of being unprepared. That is a penalty for choosing the wrong battlefield. Sign up on Binance. The truth is that the Fed does not directly move the market. Traders do. The announcement is just a spark. The firepower comes from the billions waiting to react. And right now, those billions are concentrated on Binance. Over $2 billion in inflows is not random. It's not speculation. It's positioning and trust. It's a collective decision of thousands of serious investors saying, this is where the opportunity lives. So ask yourself, if the smart money is voting with their wallets, where should you be standing? Here is what most retail traders misunderstand. They fear volatility. They see the charts spike up and down and think the risk is in the movement. But the real risk is not volatility. It's being unprepared. Volatility is opportunity if you're positioned correctly. But if you're late, if you're on the wrong platform, or if you're trading without liquidity, volatility becomes punishment. That's why the big players prepare in advance. They don't try to guess the Fed's exact words. They just make sure they're in the arena with funds ready to move on the platform that gives them speed as well as depth. Let me pause for a second to make sure no one is lost. Whales, this is slang for individuals or institutions with huge amounts of capital. When they trade, they can move markets. Stablecoins, these are crypto tokens tied to stable assets like the US dollar. They don't swing widely like other cryptos. Traders use them as a safe holding zone or as ammunition to jump into other trades. Liquidity, think of it like water in a river. The more water, the easier a boat can move. And in markets, the more liquidity, the easier you can buy or sell without changing the price too much. Spreads is a gap between the price buyers want to pay and the price sellers want to accept. The smaller the spread, the more efficient the market. Order books. These are lists of all current buy and sell orders on an exchange. Deep order books means high liquidity. Shallow order books means you'll pay more just to get in or out of a trade. Understanding these terms is not academic. These are the mechanics of how whales move and make money. And that's how retail traders sometimes lose it. Stop telling yourself you'll have time later. Stop thinking you'll wait for the Fed to speak before you make your move. That is how people get trapped. And if you're still trading on low liquidity platforms, you're setting yourself up to be the liquidity. In other words, you're becoming the exit liquidity for smarter players. They sell to you at the top and you're left holding the bag. So get ahead of the Fed, get ahead of the whales, position yourself where the smart money already is. Binance. Sign up, fund your account, be ready. Because when the Fed speaks, hesitation will cost you everything. Here is the reality. Every cycle, there are those who win because they positioned early and those who lose because they waited. Every single time, the story is the same. The whales prepare, the smart money prepares, the platforms with real liquidity capture the action. Everyone else chases, everyone else loses. Don't let that be you this time. Don't let another cycle pass where you look back and realize you had the information, you had the opportunity, but you didn't act. The battlefield is already chosen. Billions are already moving. The question is, are you moving with them or are you waiting to be moved by them? The Fed will speak, the headlines will come, but the market's real move is already happening. So don't sit on the sidelines. Step into the arena on Binance before it is too late. Share this with someone who needs to hear it and don't let them get left behind. Make sure to follow, subscribe, sign up on Binance, and I'll see you guys in the next video.